All right, welcome. Settle in for the deep dive. Today we're looking at something pretty interesting. Two areas you might not think link up immediately. We've got the Federal Reserve's balance sheet policies, specifically quantitative tightening, or QT. And then we've got the, well, let's say, dynamic world of altcoins.
Exactly. We've been digging through quite a bit of material research, analysis, articles focusing on, what's the latest with the Fed shrinking its balance sheet, and also totally separate track, what's happening in the altcoin space recently.
Right. And our mission, our goal for this deep dive is to pull out the key things these sources are telling you. Like, when do the experts think this QT thing might actually end? And are we seeing signs that altcoins might be heating up again? Maybe like back in 2021. And the big question, do these sources suggest there's actually the connection between the two? There are some specific numbers and signals that really caught our eye.
Yeah, let's tackle the Fed side first. Quantitative tightening. Basically, after years of quantitative easing, which was like hitting the gas pedal, QT is the Fed gently easing off. So instead of buying bonds, they're letting the ones they already own just mature, expire, without buying new ones to replace them, which effectively pulls liquidity out of the system. This latest round started back in June 2022.
Okay, and the sources are clear that the speed of this tightening, it's changed recently, hasn't it? They point to a specific adjustment.
Absolutely. The FOMC, that's the Fed's main policy group, they announced a pretty significant slowdown. This was back in March of 2025, specifically for Treasury securities, the amount they let roll off each month without reinvesting. They slashed that cap. It went from $25 billion a month down to just $5 billion. Big change. That kicked in April 1st, 2025. The cap for other things, like mortgage-backed securities, stayed at $35 billion, so it was really focused on Treasuries.
Wow, okay. So dropping the Treasury runoff from $25 billion to $5 billion monthly, that definitely sounds like they're pumping the brakes. Does that mean the sources give us a clear end date, like QT stops on X date?
No, not quite. There's no official end date stamped on it by the Fed. The sources talk about predictions from earlier this year. Some analysts thought maybe the first half of 2025. But now, being in June 25, the feeling presented in the material is more like, well, this big slowdown strongly hints the end is near.
Right.
Or sometime later in 2025. But, it depends on the economy, market conditions, the usual Fed stuff.
Got it. So a clear signal with that $5 billion Treasury cap from April 1st. End is likely coming, but no specific calendar date yet. Okay, now let's jump over to the other topic. Altcoins. What signs are the sources pointing to there? Is something brewing?
Yeah, the sources are definitely highlighting some signs of life, maybe momentum building. A really key thing they look at, and a lot of people in the market watch this, is how altcoins are doing compared to Bitcoin. And the main way to track that is the Ethereum to Bitcoin ratio, ETH-BTC.
Okay, ETH-BTC. Why that ratio? What's it telling us?
Well, when that ratio goes up, it generally means Ethereum, and often other altcoins kind of follow its lead. It's gaining value faster than Bitcoin is. Or maybe it's just not falling as much if the market's down, this kind of outperformance. That's often seen as a sign of an alt season. A time when money starts flowing from Bitcoin into other coins, potentially leading to bigger percentage gains there.
Right, so a rising ETH-GPC suggests maybe altcoins are getting ready to run. What have the numbers been doing lately, according to the sources?
This is where it gets pretty interesting, actually. The sources flagged the movement specifically in the month leading up to June 3rd, 2025. That ETH-BTC ratio. It made a noticeable jump. It went from around 0.0192 about a month prior, let's say early May, up to roughly 0.0248 by June 3rd.
Hold on, 0.0192 to 0.0248 in just a month. Let me just check that. Yeah, it's like a 29% increase. That seems pretty significant for that ratio. I mean, it's not the crazy highs from 2021. Those were way up there, over 0.08 sometimes, but almost 30% in 30 days. That feels like a real signal.
It really does.
Yeah.
And that's how the sources are framing it. While it's not back at those old peaks, that upward trend is seen as a strong hint that altcoins might be entering a phase of, outperforming Bitcoin, potentially like we saw in parts of 2021. The material mentions other things too, like DeFi development, maybe some VC interest picking up, but that ETH-BTC move is treated as a big technical sign.
Okay, so we've got the Fed clearly slowing down QT, probably ending it relatively soon. And we've got market signals like that big 29% jump in ETH-BTC suggesting altcoins are waking up. Do the sources actually connect these dots, the Fed policy and the altcoin action?
They definitely do. And it raises that the broader question. How can these huge monetary policy moves affect niche markets like crypto? The sources suggest that ending QT, which, remember, has been like a vacuum sucking liquidity out, could actually be a positive thing, a tailwind for crypto overall, including altcoins.
A tailwind. Okay.
Yeah.
Why? What's the mechanism they're suggesting? Is it just sentiment changing or something more concrete?
It seems to be more about the actual flow of money, the overall liquidity in the system. That's the main idea presented. See, when the Fed's doing QT, pulling liquidity out, it can make borrowing more expensive, make safer things like bonds look more attractive compared to risky stuff. So stopping that drain, or even down the line, potentially adding liquidity again, though that's not on the table right now, that can ease things up. It might make investors feel more comfortable, or incentivized even, to put money into higher risk, potentially higher reward areas, like crypto. And altcoins are often seen as even further out on that risk spectrum than Bitcoin. It's about where that extra dollar feels like going.
That makes sense. So it's not just vibes, it's the actual mechanics of liquidity making speculative plays relatively more attractive again. And the sources probably bring up history too, right?
Exactly. They often mention the period after all the quantitative easing back in 2020, 2021. That coincided with a huge crypto boom, as you know. The argument is kind of the reverse. QT put a damper on things, so ending QT might lift some of that pressure.
Okay, let's wrap this up and summarize the key takeaways from this deep dive for you. First, the Fed. The sources show they've hit the brakes hard on QT. That specific cut in the Treasury cap to $5 billion starting April 1st, 2025 is the big signal. It strongly suggests QT is winding down, probably ending later this year, 2025, but no firm date announced yet.
And then on the altcoin side, we're seeing indicators flash. That ETH-BTC ratio jumped 29% in the month leading to June 3rd, hitting 0.0248. The sources read that as a strong technical sign. Potential altcoin outperformance, maybe the beginnings of an alt season that echoes 2021.
And the crucial link the sources draw. Ending QT, stopping that liquidity drain, could create a more supportive environment, a tailwind, as you said, helping riskier assets, which includes the whole crypto market, and especially that altcoin segment.
Right. So thinking about all this, the big Fed policy shifts, these specific market moves in altcoins, leads to a question for you, really. Given these signals, how might you think about tracking this connection, this potential interplay between huge monetary policy changes and these, quite volatile market segments like altcoins going forward? Just something to chew on as you digest what these sources suggest.